No, because in my slide, the first slide will have my name, so I can display it now even before you start.
Yes, you can
So
do
maybe that's better. Yeah.
Now
So
try.
it says host disabled participant. It still says host disabled participant screen sharing.
We're going with that.
Okay. Still e-filing, yes.
And the arguments through video conference only, virtual?
Yeah, as of now only through a video conference, yes.
And summer vacations they are on, or they are also?
Summer vacation is supposed to be from 1st of May to 31st of May. So more or less with the lockdown 4, it will come down. So after that 1st June, I think it should start in any case, subject to other problems. If lockdown 5 or something continues, we don't know. But even then, I think it will still be on, probably on video for some more time before it regularly starts.
Right. So it's 5 o'clock. We formally start.
Yeah.
Welcome you all to yet another engaging session. And as those participants who have been participating in our webinars, which are being organized by Beyond Law CLC and ULS Punjab University Chandigarh, that is a 5-year integrated course for law, and which is one of the pioneer institutions in this regard. We have been holding webinars on different fields and on different issues so that one could gain the knowledge, especially during this lockdown period, and the other aspects which ordinarily in the due course would not have been touched by a student, a professional, or a professor. We are trying to touch those issues, and the issues which already are known to a particular lawyer, we are calling upon an expert who is well versed and has a better edge than the ordinary lawyers, so that their skills and knowledge is better. Today amongst us, we have R. Parthasarathy, who is a principal partner in Lakshmi Kumaran and Sridharan, which is one of the leading firms in the taxation matters, intellectual properties, and regarding foreign trades, etc. Today's topic is free and fair international trade under WTO. Mr. Parthasarathy needs no introduction as such, yet the editing screen. So this is a message from your side, which I have received in the chat box.
No, I have not sent any message.
Okay. We don't allow anybody to share the screen except for the principal speaker. And
correct.
We also request the persons kindly do not scribble on the screen, because the entire impact of the PPT changes. As we were saying, Mr. Parthasarathy has an extensive hand on experience in assisting the companies with respect to the trade remedies, foreign trade policies, and customs procedure relating to the imports in India, FTA and rules in origin. He is proficient in understanding the government policies, etc. Therefore, we requested him to come on the platform and enhance the knowledge of the professionals, especially the lawyers and other fields, including the teachers, professors, and students, who could understand the nitty-gritties of the same, which are the topic is such which ordinarily sometimes the professional shies away from this topic. And I'm quite sure that once we hear a person of the stature of R. Parthasarathy, his insights and extensive knowledge on the subject of free and fair international trade under the WTO would help us after this session feel happy that we had certain concise and precise issues dealt with in a manner which could be understood by everyone. So I welcome you all, the participants, and especially Mr. R. Parthasarathy, advocate and the principal partner in LNS, a leading law firm in this regard. For all the participants, we would like to inform that we are also streaming live on the Facebook. Let's assume somebody is not able to connect it. He can watch us live on the Facebook. Over to you, Mr. R. Parthasarathy.
So good evening, Mr. Vikas. Thank you very much for the nice introduction. And good evening to you all, ladies and gentlemen who are participating in this webinar. At the outset, of course, I thank you and also thank the organizers, Beyond Law, CLC, and also the University Institute of Legal Studies, Punjab University, for allowing me to use their platform and to share what little knowledge I have on this topic of free and fair international trade under the WTO. And more thanks to you, all of you, also because it is a Sunday evening. Whether it is a lockdown or not a lockdown, a Sunday is a Sunday and Sunday evening is a Sunday evening. But it is still very heartening to note that people wanted to have this session even on a Sunday. And I had, I don't know why I had achieved the distinctiveness of, I did 4 seminars so far under various platforms, and all of them happened on a Sunday. So this also is on a Sunday, but I'm thankful to you for being present on a Sunday evening at 5 p.m. The topic of free and fair international trade or WTO is a very, very significant and vast topic. I want to start with a caveat that it is not possible to provide an in-depth view of the subject which I'm going to talk about. The whole idea is to introduce you to the topic and also provide a bird's eye view, a top-down view of what this free and fair international trade and WTO, what I mean by that is all that I intend covering probably in the next 1 hour, so that there is adequate time for your questions and answers. So with that brief introduction, I'll get into the subject. Now, my presentation outline, as you will see from this slide, is the first portion is introduction. Because the topic is on free and fair international trade under the WTO, and you all know the WTO came into existence on the 1st of January 1995 at the end of the Uruguay round, which resulted in the legal document called GATT 1994, General Agreement on Tariffs and Trade 1994, which is the legal text. But because we are talking about it in the context of WTO, I also thought it would be useful if I spend a few minutes on the progress of the General Agreements on Tariffs and Trade when it was founded in 1947 till WTO came into existence, and then of course till 2020, whatever are the progress, we have that as a short introduction. Then any international trade faces 2 types of barriers. One we call as a tariff barrier, which you know as the customs duties, and the other is non-tariff barriers. So I just thought I would give a brief introduction to the tariff and non-tariff barriers to international trade. After having introduced these 2, then immediately we plunge into the relief against what we call as non-fair trade or unfair trade under the WTO. Under that, I'm going to cover the agreement on anti-dumping, which is dumping of goods is an unfair trade practice, how to rectify that. Similarly, export of goods which are subsidized also distorts the international trade. Therefore, what relief or what action can be taken against subsidized exports? So the dumping and subsidy are the 2 aspects which I'm going to deal under the 3rd bullet called relief against unfair trade. And the last, I have put only the bullet, it is relief even in a fair trade, which deals with an agreement called Agreement on Safeguards, maybe generally not falling strictly within the scope of this topic, but if time permits, I will say a few words on that. So this is the broad outline which I am going to take for the next 50 minutes or so. Now, very quickly, the journey from 1947 till date. As all of you know, the General Agreement Tariffs and Trade, as the name itself suggests, was in 1947 restricted mainly to reduction of customs tariffs on goods exported from one country to another. Therefore, India, when it was a founding partner of the GATT 1947, is also a founding partner in the WTO 1995. From 1947 till the Kennedy round, the various rounds of trade negotiations take place. There were a few other negotiations which took place in between. Most of them were concentrating only on negotiating and obtaining a reduction in customs tariff as a bargain from the various countries, so that one country may be able to export its product to another country, and the customs tariff is not too high so as to discourage the import of that particular product to the country. So the entire concentration was on negotiating on reduction of tariffs. Slowly, when we progressed into the main round of the Kennedy round and the Tokyo round of trade negotiations, of course, continued to be the reduction in the customs tariff was a very, very important and central theme. But they also brought in various other disciplines in order to make international trade as free as possible. So we had an article called Article Roman 6, which was dealing with dumping and also the subsidies and countervailing measures as two trade remedy measures, even in the Kennedy round. But they were in the very, very preliminary stages, and not much depth was gone into in respect of these agreements. And this
sorry to bother you. Just stop the annotation at your end so that nobody can scribble.
No, sir, it is not my end at all. I'm not doing anything at my end.
No, I am saying but you're doing screen sharing. There's one facility of stop annotation. Then nobody can scribble it.
Okay.
You can use that so that nobody can scribble on it.
Okay. You say I have
annotation. Stop annotation.
Now say mouse.
On the screen right side, you will find a stop annotation.
No, it is not what I have. Undo, do, format, eraser, spotlight, and stamp only. I don't have
stop annotations.
No, I don't find a stop annotation. At least I don't get anything.
On the extreme
there.
right, right on the top, on the extreme right.
Yeah, that's what I'm saying. But
view options.
No, it shows me everything: save, clear, redo, undo, like that. But it's not what you are saying. Stop, no.
Stop annotations.
That's not.
You can.
Yeah. I've done that.
Yeah.
Okay.
Now just repost this slide so that these scribbling marks are gone.
Okay. I'll just stop sharing that.
Yes, it's perfect. Now you can come to the second slide.
Yeah, I'm coming. Just one. Okay.
Yes.
Okay. So I was just discussing from the General Agreement on Tariffs and Trade 1947, even the trade negotiations in between all concentrated on reduction in the customs tariff, which was also the central theme in the Kennedy round and Tokyo round, etc., and also the Uruguay round. But a number of other refinements were taking place. For example, even in the Kennedy round and the Tokyo round, it was recognized that while international trade must be free, it must also be fair. And dumping of goods in international trade or exporting goods because they are provided with subsidies by a government or true unfair trade practices, therefore they must be dealt with, was also a theme in both the Kennedy round and the Tokyo round. But a large part of the actual mechanism and detailed guidelines as to how to implement them came to be around the Uruguay round of trade negotiations, which took place between 1986 to 1994. And we had, as I said, Article 6, more like a section, which broadly talked about dumping and subsidies. But therefore, we got an agreement called Agreement on Implementation of Article 6, which is what we normally refer to the Anti-Dumping Agreement. Agreement on Implementation of Article 6, and you also had an agreement on subsidies and countervailing measures. These two agreements gave very detailed procedures under the WTO as to how member countries can counteract dumping of goods or goods which are exported to your country, which are subsidized by the government of other countries, how to act on them. Detailed guidelines were provided under the GATT 1994 and the WTO. That is the reason why, because very detailed guidelines came into existence in 1995, I thought I should trace this history to you. In addition, one other important thing as a matter of knowledge is for the first time, the Uruguay round of trade negotiations departed from the general theme, which is negotiating tariffs and tariff-related issues, but it went into a new area. Always GATT was dealing only with goods. So for the first time, we got a general agreement on trade in services, GATS, which you would see there. Then agriculture was a subject which was never dealt with earlier. Therefore, we had an agreement on agriculture. Similarly, even though GATT dealt with goods, textiles and clothing was always kept outside the negotiation. And for the first time, textiles and clothing was brought within the negotiation under the Uruguay round. You also had a trade-related investment measures, TRIMS, which I had called, and you also had trade-related aspect of intellectual property right, TRIPS, which talks about patent, trademarks, copyrights, then geographical indications, trade secrets, layout of integrated circuits, so many, 7 different varieties of intellectual property rights which are related to trade in goods. All of them were negotiated and brought into force. Now, after 1994 and 1995, all these agreements came into force, and as a founder member and all members of the WTO are bound by all these agreements. Once they sign into WTO, they are all bound by all these agreements, and they have to implement their undertakings under these agreements, either by incorporating them into their domestic law or by doing a new domestic legislation which are in line with these agreements. That is how we also have separate provisions in our legislation on anti-dumping, subsidies, countervailing measures, etc., which I'll come at a little bit. Then, of course, finally, Doha round initiated in 2000, and in 2020, we have still not made any great progress because there are a lot of issues which the developing countries have raised against the developed countries on the negotiations. So the negotiations after the Uruguay round are more or less at a standstill. So this is a development to show that 1947 till date, free trade is the objective of the GATT and the WTO, but at the same time, it must be fair. And 2 types of unfairness in dumping and in subsidies and countervailing measures were identified, and detailed guidelines were provided, which is going to be the subject matter of my further proceedings today. As I said, the second bullet, if you see the outline, I was talking about tariff barriers and non-tariff barriers. One of the major issues in international trade is the customs duty. Whenever goods are exported from one country to another country, a customs duty is leviable on the act of importation. The levy is on the act of importation. Now, look at what I have written. In 1991, when we first took the economic liberalization, at that time, the basic customs duty peak rate was 80%. So, which means you can imagine if somebody is exporting goods to India and the importer has to pay, in addition to the price, 80% of that value as a customs duty, how costly it would be for that particular person. And that person therefore would import only if he is not able to get those goods in India, or is not able to get those goods in India price which is less than the value plus 80%. So the 80% constituted what we call as the protection to the domestic industry, to the extent that the domestic industry was up to 80% of the more than the international price, still it would be competitive in the market. And therefore, the tariff barrier was a major impediment to free international trade, especially coming into India. Now, in 1991, when we undertook the economic liberalization, every year we reduced 80, it came down to 65, then it came down to 50, then it came to 35. Even 35 is a significant amount of basic custom duty. 4 years down the lane, by 1995, it had come to that. But when we negotiated the Uruguay round, all the countries, we have certain requests from other countries on what goods are of importance to us and how, what should be the tariff concession we negotiate. Similarly, other countries say, we want to export to India. Your customs is at 35%, 40%, 50% is too high. You are stopping our export. So please give tariff concessions. So in the Uruguay round of negotiations, India agreed what we call to bind its tariff, customs tariff, to either 25% or 40% at the peak. That means you can't go beyond that. You can have 25 or 40, but you can always be lower than that. That is what we agreed for various industrial inputs and products, not for agricultural products, not with reference to textiles and clothing, where we had the advantage of low cost and export, etc. But even within the product, for example, even today you hear about the American president talking about Harley Davidson car. We had said for motor vehicles, etc., we will have a tariff 100%, even though we said we will have 25 or 40% for various other industrial products. For motor vehicles, we will not have less than 100 because we had a very good manufacturing facility here. We didn't want them India to be flooded with the cars, etc., manufactured product coming into that. And from 1991, in 30 years, if we look at 2020 today, almost like 80 or 85% of the goods imported in India suffer a customs duty of between 7.5, 10 and 12.5%. That is the amount of competitiveness to which we have progressed during the last 30 years. So the first objective is to reduce the tariff barrier in order to promote international trade. Next, what are non-tariff barriers? I may reduce the tariff to 5%. Therefore, everybody is saying, okay, if you import something in India, it's only 5% custom duty, which is a very small amount. So there is absolutely free international trade. But you may have non-tariff barriers. You may say custom duty is 5%, but in order to import, you require a license. And the government may not grant a license. Therefore, there was an Article 11 says, which is on import licensing, countries should not have import licensing, etc., except in specified circumstances. And import licensing should not act like a non-tariff barrier. That is Article 11 of the GATT 1994. Then people keep developing new things. You create a technical barrier to trade. So you create a standard, a technology standard, and then say, unless and until the goods fulfill that particular technology, I cannot allow the import into the country. So that is called a technical barriers to trade. Therefore, they negotiate an agreement on technical barriers to trade. While you may develop standards to ensure that the product satisfies standard, that itself should not become a non-tariff barrier to the free movement of international goods. Valuation of goods under the customs and the application of exchange rate can also become a non-tariff barrier. For example, I import certain goods at $100. But if the government of India says the customs duty shall be paid on a value of $500, that is a tariff value, $500. So effectively what you have done is, even though I imported at $100 and I have to pay 5% of $100, you are asking me to pay 5% of $500 by fixing an artificial value. Therefore, even valuation of goods could become a non-tariff barrier. Therefore, the WTO also negotiated an agreement on implementation of Article 7, which deals with customs valuation. And you will all be glad to know the concept of transaction value, which we are having in the GST and which we had in the Excise Act from 2000, the mother of all transaction values was found in the customs valuation on the 1st of January 1980. At the end of the Tokyo round of negotiation, the WTO, the GATT 19 and the WTO decided transaction value, that is the price paid or payable for the goods between the exporter and the importer, should be the value for customs purposes and not any other artificial value. So just to give you, there could be other non-tariff barriers also. I'll give one example. I had a case where there was an exporter of bicycles from India to France. As you know, bicycles will all be exported in the CKD form. It goes to France and the importer then assembles the entire thing into the finished cycles and then sell them. Suddenly France said, I will allow import of bicycles from India only if they are completely assembled and factory fitted condition. Now generally, if you come to know about it, you may know what is there. The effect of it is, if I was able to carry 500 cycles in CKD condition in a 20-foot container, I could carry only 80 cycles if they are actually fitted, but then they have to stand one after the other, which means the freight itself was becoming 6 times costlier, and in the process, you are not able to sell the goods at a competitive price in the market. We fought against that and got that non-tariff barrier eliminated. This is to again give you a flavor of examples of non-tariff barriers. So free trade need not necessarily come only from the reduction of tariff. It also must come from the reduction of non-tariff barriers. So the negotiations concentrated on reduction of the customs barriers and at the same time elimination or reduction of the various non-tariff barriers. So these are the two things which were simultaneously sought to be achieved during the various rounds of negotiations, and all of us are following these procedures. Now, with that brief introduction, I now come to what we call, within quotes, unfair trade practice in WTO law. People said, yes, international trade must be free. It must be at a lower tariff. It must also be without any non-tariff barriers, but it must also be fair. If a country practices, within quotes, unfair trade practice, then there must be a mechanism by which member countries which are affected by such unfair trade should be able to take corrective action. This was sought to be done through Article 6, as I said, which existed from 1947, but in a very, very brief form without any guidelines as to how the whole thing to be implemented. Therefore, very detailed negotiations took place and we got an agreement called Agreement on Implementation of Article 6, which is what is referred to the Anti-Dumping Agreement. And that agreement is how to counteract dumping of goods. The second unfair trade practice is governments of exporting countries providing subsidies for export and making those exports competitive and in the process create problem in the importing country. Therefore, an agreement was negotiated called Agreement on Subsidies and Countervailing Measures, which is to counteract actionable subsidies to promote export. Of course, not all subsidies are actionable, only actionable subsidies which promote export are to be counteracted. These are the two agreements, the broad features of which I am going to deal subsequently now. I'm going to deal only with two slides on this agreement on implementation of Article 6, popularly referred to as the Anti-Dumping Agreement. First of all, what is dumping? Now, dumping as a concept, classical concept, was prevalent even in the year 1919, 1920, 1926, etc. You will find articles on dumping. The classical example of dumping is a country or exporter in a country exports goods to another country at such a low price that that price the domestic industry in that country is unable to withstand. Therefore, the domestic industry dies. And after the death, the exporter raises his price in order to recoup all the losses he originally incurred by the dumping and then recover and come to the marketplace. That was the original concept of dumping. But as the days progress in the agreement, it was brought into, let me say, a mathematical formula. Dumping is said to occur when a particular item is exported from one country to another country at an export price which is less than its normal value. Therefore, you have two terms called normal value and export price. If normal value is 100, whatever is the normal value, I come to that. Let's assume normal value is 100. If export price is 80, then 20 is the dumping margin. So that is the first slide I'm talking about, first portion. What is dumping? Two concepts of normal value and export price. Normal value, let us say, is $100. Export price, let us say, is $80. Then dumping margin is $20. Effectively, all that it means is a product can be exported to one country at a profit which is equal to that which they are earning in the domestic market. You cannot say, I will earn a profit of 15% of the domestic market, but for my export market, it will be 5%. That is not profit. Therefore, you cannot discriminate on the basis of a difference in profits between the domestic and export. So the dumping margin concept is normal value minus export price. Now, export price is very, very clear. The price at which the goods are exported to a particular country. We may have a CIF price. It may be a delivered duty paid price, delivered duty unfair trade. It may be a free on board price. Different prices come. We'll come to that. That's an export price. What is normal value? That is the second bullet. It is important. Normal value means the comparable price. In the ordinary course of trade, for the like product, when destined in the domestic market of the exporting country. Now, why I said first normal value, export price, and then I come to that is, each one of this is a subject matter of interpretation, negotiation. What price is a comparable price? What do you mean by in the ordinary course of trade? What do you mean by like product? So these are three different terms, which of course I'm not taking because that will take me almost 1 hour to explain those concepts. We'll come to that. But most important is, let us assume a case where a product is manufactured and sold in the United States. It is sold in the United States as $100. It is exported to India at $80. I am assuming 180 are a comparable level for whatever reason. I'll come to that. Then 20 is the dumping margin. Now, what we are now looking at is this normal value called $100. It must be a comparable price. let us say, for example, you are exporting to an end customer in India, but you are selling to a wholesaler within your home country. Then the price to a wholesaler and the price to an end consumer are not comparable prices. Therefore, you will have to determine what is the level of trade when I export to another country, and I should find out the same level of trade in the domestic market in order to make the price comparable. Now, it also says the price must be in the ordinary course of trade. I gave you an example. Normal value is 100, export price is 80, therefore dumping is to the extent of 20. Now I take another example. Normal value is $80, which means the price at which it is sold in the domestic market is $80. Export price is also $80. So according to the first definition, 80 minus 80 is 0, means there is no dumping. But I will now add a small problem. The cost of production of the goods is $90. So the cost to produce is 90. You are selling it at $80 in the domestic market and also at $80 in the export market. Then the law says it is not in the ordinary course of trade. In the ordinary course of trade means you must be able to make a profit. So if you are selling in the domestic market, which is at a loss, then they say it is not in the ordinary course of trade. Therefore, notwithstanding domestic price is 80, export price is 80, there could still be a dumping margin because cost of production is 90. Then they will say normal value is cost of production 90 plus a 10% profit. Let us say $99 you should have sold. You sold at $80. Therefore, $19 is the dumping. Therefore, in the ordinary course of trade, what I again have explained is very, very simple terms. There are a lot more in the ordinary course of trade. We all know as practitioners, generally also, it is not that every product produced is sold at a profit. Or you may say some quantity at a loss, but most of the quantity at a profit. Therefore, the law recognizes, when I say in the ordinary course of trade, I'm not saying just because you make 1 or 2 transactions at a loss in the domestic market, that price is not a normal price. Therefore, they have again discipline to say, if you have 100 kilos sold in the domestic market and 85 of them are above profit and 15 of them below profit, which means it is less than 20%, then the entire thing will constitute price in the ordinary course of trade. So that why I'm saying all this is there are a lot of intricacies when you get into the agreement, but the broad principle which you have is the price between the export and import must be a comparable price. It must be in the ordinary course of trade. The general meaning of it is it must be at profit. You can make certain losses, but it is restricted. If you have sold in the domestic market less than 20% of the quantity at a loss, you can still say all the price, the weighted average of the entire price is in the ordinary course. Then there is a concept called the like product. What you may export and what you may sell in the domestic market may not be identical. It's possible that there are differences. Therefore, when you talk about like product, they say like product means a product which is identical or alike in all respects to the product which is exported with the product which is sold in the domestic market. But they give a relief. If you cannot find an identical product, you can find an article which is similar to the exported article. They generally say which has like characteristics, etc., to perform the same function. Therefore, there may be some marginal differences between the export product and the domestically sold product, but they may still constitute like products. But only thing is, if there are any differences and those differences affect prices, you must make an adjustment for those prices. Therefore, very simply put, is dumping is a phenomena where an exporter, it is an action of an individual exporter, not of a particular country. It is of an exporter. He exports the goods to another country at a price which is less than the normal value. And normal value is generally the domestic price in the ordinary course of trade for an identical or a similar product, subject to making adjustments. So this is what is called as a dumping. You may also have a situation where I don't sell at all in the domestic market. I only export. Then what is the normal value? Therefore, they are given alternative. If you do not have any domestic sales, then you can take a comparable price at which you are exporting to another third country, or you can adopt cost of production plus a reasonable margin of profit. So the dumping calculations and all that will become more and more complicated. But for the purpose of this session, what is important is to recognize normal value and dumping margin, the difference as dumping margin, and normal value has to be determined in this particular manner. Now, under the WTO law, dumping per se is not illegal. Dumping is recognized an unfair trade practice, but it is not per se illegal. It becomes actionable only when it causes material injury to the domestic producer of a like product. Here also like product comes in the country. Therefore, let us assume goods X are exported from China to India. And I say that price is a dump price. There are 10 manufacturers of those goods in India. If the dumping results in a material injury to these domestic producers, then and only then dumping becomes actionable. Suppose I do not have a domestic industry manufacturing that product. So notwithstanding that there is dumping, it is still not actionable because there is no domestic industry which is suffering injury. Therefore, the actionability of a dumping action arises only if there is a material injury to the domestic producer of a like article. Again, the domestic producer in the importing country, let's say India, need not produce identical goods. They may also put similar goods. But so long as the buyer in India will buy the Chinese goods or the Indian goods substitutability depending on the price and other factors, they become like products. Therefore, material injury must be caused to them. And material injury, how to determine? Again, very detailed guidelines are given in this agreement on anti-dumping, where there is a volume effect, there is a price effect, and there are identified 14 parameters which every investigating authority has to go through and show that there is a material injury. And the third important requirement is a causal link between the dumping and injury. You must show it is not enough that there is dumping separately, there is injury separately, but you must also show a link between the dumping and the injury. You may be suffering injury because of numerous other factors. So we will have to remove those factors and say whether dumping is also causing you injury, then and only then it is actionable. Therefore, under the anti-dumping agreement, three things are important. One, there must be an existence of dumping. There must be a material injury to the domestic industry, and the dumping is a cause of that injury, material injury to the domestic industry. Then and only then it is actionable. How is it actionable? The importing country, after conducting an investigation, can impose what is called a custom duty in the nature of an anti-dumping duty equal to the margin of dumping. In the example I said, $100 normal value, $80 export price, $20 the dumping margin. So in order to correct the unfairness of the $20 to a fair price, the government can impose an anti-dumping duty equal to $20, which will be over and above the normal customs tariff in order to make the playing field level playing field. So one instrument under which we have this anti-dumping correction is this particular agreement, and very detailed investigation process is given. I have not given. It has to start again by domestic producers who are affected by the dumped imports have to make a petition like what we talk about, a plaint or a petition we presented to the Director General of Trade Remedies in India, giving prima facie evidence of dumping, injury and causal link, and then the authority investigates and initiates the investigation. He invites the exporters from the countries to give information. He verifies the data, determines the dumping. He verifies the domestic industry data to see whether there is injury. He also identifies whether there is a causal link between the dumping and injury. All parties are allowed to participate in a hearing and give their views, and then he comes up with a finding, and the finding is implemented by the Ministry of Finance through a customs notification. So that is a very detailed process on evidence requirements, confidentiality requirements and all that. I'm not getting into that for the purpose of this session. And there are other issues. Dumping, which is today, it may cease to exist tomorrow. Therefore, there is a procedure for reviewing the existence of, continued existence of dumping and injury. There is also, any anti-dumping duty is valid for 5 years. So at the end of 5 years, whether you should continue the duty or not, there is a separate process. So all these have been clearly identified in the agreement on implementation of Article 6, which of course we have implemented in Section 9, Section 9 capital A, Section 9 capital B, and Section 9 capital C of the Customs Tariff Act 1975. So this is broadly for me to introduce you to this anti-dumping agreement. Now I will quickly go to the agreement on subsidies and countervailing measures. I will leave all questions on whichever area, whatever depth, we can go into that. But for the presentation, I will keep it short. Now, there is an agreement on subsidies and countervailing measures. As I said, export promotion through subsidies is also an unfair trade practice. Therefore, if the government of a country provides subsidies which enables the exporter to export to their country, the other country can investigate, identify the amount of subsidy, and impose that as a customs duty called countervailing duty, which is again under 9, 9A, 9B, 9C, as I said. All these four are covered, both anti-dumping and subsidies, and are covered under these four sections. And impose, which means the subsidy granted by one country will be countervailed in the importing country. Here again, like what you saw as a dumping is a prerequisite, you have to identify, is there an actionable subsidy? That is what I am going to deal with. Once an actionable subsidy is found, the same requirements as anti-dumping, that it must cause a material injury to the domestic industry, and there must be a causal link between the subsidized imports and the injury to the domestic industry. That will be common. Principles are the same, whether it's anti-dumping or the subsidies. But like the definition of dumping, the definition of subsidies under the agreement on subsidies and countervailing measures is very important. Now, the first thing they attack is if there is a financial contribution. There is a financial contribution. What do you mean by financial contribution? 4 types are identified in the agreement. 1, a transfer of funds, by whom we will come to that. Therefore, a financial contribution is the nature of a transfer of funds. A revenue which is otherwise due is foregone or not collected. Now, this is something what say, therefore you say, let us say, I export certain goods. Earlier under the excise law and also under GST law, now what is the provision? You can export the goods on payment of IGST and you can claim refund of that IGST, which means what? You can export the product without any taxes. The other route is what? You export the goods without payment of taxes, but the input tax credit accumulated corresponding to that, I will give you as a refund. What does it mean? Whenever you export goods, you export only the goods and not the taxes along with that. Here, what they say is government revenue otherwise due is foregone or not collected, which is what we call as exemptions, credits, etc. But there are certain exceptions. What I talked about are universal exceptions throughout the world. Export a product without duties or give a credit to all the inputs, etc. when you are exporting also as refund. These are not considered as financial contributions. We'll come to that. There is a separate Annex 1 to this agreement which gives what are all the illustrative list of export subsidies, and you can clearly identify this type of transaction is not an export subsidy. But suppose you set up a unit in SEZ and they say for 10 years you don't have to pay income tax on the profits, export profits. That is an income tax, which a revenue which is otherwise due is foregone or not collected by the government is a subsidy. Therefore, an income tax exemption on the export profits to SEZ unit is definitely coming under the category of financial contribution. You may remember, some of you, earlier export profits under EOU, etc. used to have an exemption under Section 80HHC of the Income Tax Act. That is also held to be a countervailable subsidy. The third financial contribution is government can provide general infrastructure, no problem. That is not considered a subsidy. But if government provides goods or services, or if government purchases goods, that could constitute a financial contribution. All these are types. Whether as a result of that there is going to be a benefit or something, we will see later. A financial contribution is deemed to exist where the government buys goods or services or provides goods or services. If they do, there is a financial contribution is what. Now, we'll take a few examples when I come to that later. And then there can be an indirect contribution, which is government paying to a funding mechanism or giving it to a private enterprise and asking it to perform any of those functions. Yeah, a direct transfer of funds is where government gives grants or loans, etc., or it gives loan guarantees. All this could constitute a financial contribution to the exporter. Similarly, revenue not foregone could, I am still saying could because I am going to come and say when it will confer a benefit. The government can provide general infrastructure, no problem, but if it provides goods or services or purchases goods or services, they will examine whether it at market rates or something. If it is not at market rates, there could be a subsidy there. Or an indirect contribution, government does not do, but it does through a funding mechanism through a private sector. So these are the types of financial contributions identified in the agreement on subsidies and countervailing measures. And that financial contribution must be provided by a government or a public body. That is the word used. Government, all of us are clear, ministry, department, Director General of Foreign Trade, Central Board of Direct Taxes, all that are treated as part of the government. You can have a public body, Reserve Bank of India, Air India. You have National Mineral Development Corporation, which is a government company. So we have this problem. For example, Reserve Bank of India had given instructions to the various banks. The export credit interest rate will be much lower than what you normally provide for others. So you have what is called the pre-export credit and post-export credit. And if any of you are in the export business, you know the rate of interest will be lower for export shipments as against domestic shipments, etc. That could constitute a subsidy, and that has been held to be a subsidy when Indian exporters have been subjected to investigation in other countries. When, for example, National Mineral Development Corporation, it mines the high-grade iron ore and provides it to the steel industry for it to convert it into iron and steel, Steel Authority of India Limited, TISCO, etc. Now, NMDC, because 98% is owned by the government and it comes under the steel ministry, it could be treated as a public body, which means government is providing iron ore, which is goods. It is not general infrastructure. There could be a subsidy if the price at which it gives that iron ore is less than the market price. So it covers both a contribution by the government or a public body in one of those four areas. Now, benefit. Just because there is a financial contribution, it does not mean there is a benefit. Therefore, you need to also show a benefit is thereby conferred. A financial contribution by a government and a benefit is thereby conferred. If you are providing goods and services, they will examine whether the goods and services are provided at less than market rates. So if the market rate is 100 and the government is providing at 80, they say a subsidy of 20 rupees or $20 is being provided. So every time a government institution is involved in providing goods or services, the other countries may examine what is the price and whether it is a prevalent price in the market or at less than the market price is settled. Similarly, if the government purchases, government may buy it at a higher price. By buying it at a higher price than the market, you are again providing a subsidy. So it can be both ways. Government sells goods or services at lower than the market rate. Government purchases at a price higher than the market price. So we can talk about the minimum support price, etc., agricultural product. But because agricultural products are generally out of this investigation process, we don't. But otherwise, a benefit could be there. You may provide a loan to an entity, government, but the interest rate at which it provides is less than the market rate. So every time there is a benchmark and you are providing it lower than the benchmark, a benefit could be conferred. Government makes an investment, let's say in an entity. If it makes an entity, they'll say, in those circumstances, would a private investor, would he have invested? If he would have invested, then no benefit is conferred. But if nobody would have invested in this company because of its financial position and its contribution, and yet government goes about making an investment in that particular company, then they will consider that a benefit is thereby conferred. Therefore, under the agreement on subsidies and countervailing measures, the three things which they look at is there a financial contribution as defined? It must be provided by a government or a public body, and a benefit should be conferred. And there is a fourth requirement, and that fourth requirement is what? It must be specific. if it is a general thing which you are providing throughout the country, it's a different thing, because it is a sovereign power to grant or do something across the country. So today, government may say, because of the coronavirus, across everybody, the income tax rate will be only 15% on the profits. Nobody can consider you are originally having 40, now you are giving 15, therefore subsidy. No, because it is across the board throughout the country. If a financial contribution in the nature of a reduction in tax is specific to an enterprise or a region or a sector, then it will be treated as specific. And only a subsidy which is specific is actionable under the agreement on subsidies and countervailing measures. And one important thing which I am going to deal is, you will see on the right hand side, prohibited subsidies. Prohibited subsidies by definition are treated as deemed specific, and India is facing most of the action under this category of prohibited subsidies, which I'll come with the next slide. Now, two types of subsidies are prohibited. A subsidy shall be prohibited and cannot be maintained, one, if it is contingent upon export performance, or it is contingent upon use of domestic over imported goods. So these are the two types of subsidies which are prohibited. Now I'll take an example. We have what we call as the merchandise export from India scheme. Under this, what to do? I am an exporter. I export certain goods to the European Union. Those goods are notified by the Director General of Foreign Trade. For export to Europe, I get 3% of the FOB value as the MEIS, or merchandise export from India scheme. Now, you can say it is contingent upon export. If I export that product to that particular market, I get 3% of the FOB value. So it is clearly contingent upon export performance. That means that is a prohibited subsidy. A prohibited subsidy is deemed to be specific, and because it is deemed to be specific, it is actionable. Similarly, the other can be, I will provide a subsidy if you use 60% of the raw material from the domestic sources instead of from imported sources, which means it is contingent upon use of domestic over imported goods. That is also prohibited. I must have a freedom to decide to either source domestically or import, depending purely on the economies, and not based on a subsidy which will be granted by the government. Now, this prohibited subsidy is where we are having a problem today. From 1995, when this agreement came into force, we were having a number of export promotion schemes. You may know about the duty entitlement passbook scheme. We had the exempt script scheme. We had the special import license scheme. So many different types of schemes which were there. And now we have the MEIS scheme. You also have the export promotion capital goods scheme, under which if you import capital goods, you don't have to pay any customs duty on that, provided you fulfill 6 times the value of duty saved as an export obligation, then you are given the free duty. That is actually contingent upon export performance. So all these subsidies are deemed to be prohibited. These prohibited subsidies also are actionable when they cause material injury, and they also have a causal link between the subsidized imports and injury, just like I talked about. And there is an investigation process, and all other issues, etc., whatever are applicable to the anti-dumping applies to the subsidies and countervailing measures. Now, before I stop, I just wanted to let you know, United States has challenged 5 different schemes which India operates as being contrary to the agreement on subsidies and countervailing measures in the WTO. There is a dispute settlement whereby if governments of the countries feel that one country had not adhered to its obligations under the particular agreement, it can take it to a dispute before the WTO, where we have what is called a panel of 3 judges first decide the dispute. And if the parties are unhappy with the decision, they can appeal to another body called the appellate body. And after the appellate body, the decision is final, and whichever country is held to be violative has to put its house in order. That's how these things operate. So the United States in 2018 brought a case against India saying that the Indian export promotion schemes of export promotion capital goods scheme, the merchandise export from India scheme, the SEZ, Special Economic Zones Act, the export 100% export oriented schemes, EHTP, and the biotechnology parks and other schemes, 5 schemes as being violative of the India's commitments under the agreement on subsidies and countervailing measures, and those were held to be not consistent with WTO by the panel of 3 judges in the WTO. And in November 2019, India has appealed to the appellate body. Till the appellate body decision comes, we are entitled to maintain this. After that, if the decision is against us, we have to scrap these schemes and bring into existence schemes which are consistent with our obligation under the agreement on subsidies and countervailing measures. Just to conclude that portion, between 1995 till 2016, we were having all these schemes, but no country took India to the WTO saying these are inconsistent with India's obligations. Why? Because under the WTO, there was an exception which said countries which have a GDP or GNP of less than $1,000 per annum can provide these prohibited subsidies. Therefore, India was at that time in 1995 less than $1,000 GNP, and they said if you cross $1,000 continuously for 3 consecutive years, then you lose the status of a developing nation, and then you have to remove all these prohibited subsidies. And according to the World Bank statistics, 2013, 14, and 15, India's GNP crossed $1,000 per annum. Therefore, in 2016, we were no longer entitled to provide subsidies which were prohibited subsidies under the agreement. And therefore, since we did not withdraw, the United States brought that action, and other countries also joined and said, yes, India should remove. So that is the story as to why today government is thinking about removing all these schemes and substituting with new schemes, and they are in the stage of formulation. But one important thing for you to know is, between 1995 and in today, while as a developing nation we are entitled to have these subsidies, they were still actionable if they caused material injury to the domestic producers in those countries. So a lot of what we call as a subsidies and countervailing investigations have taken place against Indian exporters exporting goods to the European Union or to the United States under the agreement on subsidies and countervailing measures, and countervailing duties equivalent to the amount of subsidy granted by the government had been taken away by those governments for influence. It's not that it is not actionable. It was actionable between 1995 till we withdraw because of our developing nation status. We were entitled to maintain, but they were still actionable if they caused injury. But once we cross that threshold, we cannot even have schemes which are inconsistent with the agreement on subsidies and countervailing measures. Therefore, the dumping and subsidized exports are 2 types of unfair trade measures which have contemplated in the WTO and which have been implementing. And you should know, India is the biggest user of the anti-dumping agreement, and almost like 67 or 70% of our cases are against China. We have been very effectively using the tool to protect the domestic industry. To the extent we are able to prove dumping, then we are able to prove material injury and causal link. So these are the 2 agreements which I thought I would share with you in the 50 minutes to 1 hour given to me. I, of course, open to questions. A lot more can be covered, and normally an anti-dumping agreement, if you want me to cover all the details, it takes me about 3 hours. So obviously in a 45 minutes to 50 minutes, this is a broad information. That's why I said I'll give you a bird's eye view. And you are, of course, free to ask me any questions or doubts which you have. Thank you very much for this opportunity.
Thank you. The capsule itself is enough for anybody who has joined for the first time. Since it says, is the voice audible or it's isn't?
Yeah, it is audible. It is audible. Yeah. Absolutely, no problem at all. I just stop sharing so that I'm available. Yeah.
Yes, Advocate Amit Kumar. What we call China is doing in the world, whether it will come under the dumping or something else, no country is able to compete with Chinese products. What is your take on this?
I think it's a very, very good question. See, because you asked this question before answering, I'll just make it a slide. There is a provision of the anti-dumping agreement for treating certain countries as what we call as non-market economy countries. And China is treated as a non-market economy country, which means its costs and products, etc., are not operating on the basis of market principles. There is enormous amount of government intervention in anything. So that is definitely there, and it is because of this non-market economy we are able to take action against many of the dumped imports, or very few subsidies. Most of the dumped imports we are able to counteract from China. But sometimes, as you rightly say, even after imposition of the anti-dumping duty, there is still, they will be able to export the price at that price, and then anti-dumping duty is paid, and still probably the goods are being imported into India. See, it is very difficult to answer your questions as to whether or how China is able to do. I have done 40 or 50 investigations. I have been to China. I've seen many of these things. The one thing which I observed is, one, is definitely the productivity is extremely high. There's no doubt at all. I had been to some places which produce various types of ceramic tiles, wall tiles, floor tiles, etc. And I have seen the smallest company in that area has a production capacity higher than the biggest company in India producing those types of. Therefore, this enormous amount of economy scales are also there. Economies of scale, definitely it is there. There is a productivity, but to my knowledge, it's again a personal view, there are also a lot of doubts with reference to the way in which they maintain the accounts. Therefore, it is almost impossible to determine whether the costs are actual costs which are reflected, or the actual costs are not shown to anyone. And disadvantage for all of us is language is a very major problem. Whereas when you come to India, everybody is able to say their annual report in English, everything is available in English, people are able to do the verification so fast, whereas everything there is in China. So understand, if he says this is how, what it is, unless you have a translator who goes into that and tries to tell you how it is to be done, it's very difficult to determine. Therefore, one, they definitely have certain advantages, I would certainly say, but there are also certain things which are not clear, like how much credence you can give to their accounting systems of each of those those companies. So whether you're really looking at their actual costs, etc., we don't know. But if the actual costs are much higher, then who is supporting their losses? Is the government supporting their losses? How are they supporting it? Those are measures. I think there is definitely not much of transparency available.
Right. Dr. Thanaji Rathore, how free trade agreements will impact in this case?
It's again a very, very valid and interesting question. Now, free trade agreements are provided for within the WTO system. Otherwise, in the WTO system, as you say, it is all, if we were today we are 165 members, all agreements are binding on all 165 members. You cannot say, I will take some, I will leave some, the entire 165. But within that, they say you can negotiate free trade agreements with a country or a group of countries. That is why we have free trade agreements with ASEAN, which is with 10 countries. We were trying to negotiate the regional comprehensive economic partnership agreement with 16 different countries, but finally it failed. We have India, Japan, we have India, South Korea, India, Sri Lanka. So we have bilateral, you have India, SAARC countries, you have India, ASEAN, etc. The WTO specifically provides an article that countries can negotiate free trade agreements. The impact of that system is, again, because you asked the question, there is one very fundamental principle in WTO called most favored nation treatment. This is a cornerstone or foundation of the WTO, which says if India extends a particular benefit to one country member of the WTO, then it is obligated to provide the same treatment to all the 65 member countries of WTO. It's called the most favored nation, which means I don't have to negotiate with 165 countries. What I extend to one, we will cover all the 165 countries. There is one derogation from that most favored nation. Is in an FTO, you can give a further reduction in the customs duties to those member countries. For example, a product imported in India generally is subject to 5%, which means any member of the WTO exports to India, it will be subject to 5%. But we say, if it is coming from South Korea under the India-South Korea Comprehensive Economic Program, then it will be 0, which means you are violating, within quote, the MFN program, but that is permitted under the WTO. So free trade agreements, that is why when you are negotiating and you are giving further tariff reductions, you are actually reducing the protection to your domestic industry. And in a way, what you are making is, you are making them more competitive to the same international level without having any protection at all, but it is permitted under the WTO.
Tejas Chandru Shah, in international jurisdiction during CVD or AD investigation, generally all Indian schemes are held to be lacking administrative control of the government. Having said so, whether self-assessment mechanism and tax regimes of India is hurting or rigorous administrative controls can help it further?
Yeah. Now, it's a question-wise. What has happened is, we do have systems and procedures. Let me talk about, for example, you are going to export a product A, for which you require 3 inputs, let's say P, Q, and R. As you know, there is a standard input-output norm. Under the DGFT, they say you can use 1.1 kilo of P in order to produce 1 kilo of A. Now, all that in the investigations on CVD, all that the government, the countries say is, if you say 1.1 kilos are required for manufacture of 1 kilo of the export product, you give that 1.1 kilo free of customs duties, free of excise duties, anything for export manufacturing for no problem. But do you have a system to verify, did he actually use 1.1 or did he use only 1.05? Because if you used only 1.05, the 0.05 is an extra which constitutes a countervailable subsidy. So the major objection to those of the investigation, about 70 of them which I handled, the countries say, you give inputs no problem without taxes and duties for use in the manufacture export product and export no problem. But you must have a mechanism by which you determine how much of this input was actually used in the export product, and the benefit is restricted only to that quantity which was actually used. What we know is generally the standard input-output norm provides slightly a higher margin than what actually required. And I have seen people using much less than what was required in the standard input-output norms. But they will always give an account saying they are using the entire quantity for export. But when the investigating authorities come and verify, they find that you are using much less quantity for domestic. Only for export you say you are used that. Therefore, the government does not have a proper mechanism to verify. Because one of the requirements, again, a much depth when you go into the agreement on subsidies and countervailing measures is, if you are providing inputs, etc., without payment of duty for export purposes, it is permitted, but you must have a proper control system by which you verify what inputs are used in what quantities for manufacture and export of that product, and you must have a verification system. We used to have a register, but the register hardly people used to maintain anything, and it used not to be verified. But because of this investigation, it has become strict. But what is important, I want you to know, it has nothing to do with either self-assessment or a normal assessment. That has no implication. All the implication is you have to show that when I am giving something duty-free for export purposes, I am giving duty-free only to that actual quantity of inputs which are used in the export production and not for anything else. Now, you are also talking about, I don't know, there is some question on RODTP also.
One is by Vinod. He says, what is the future of SEZ in India post-India WTO's GOST appeal?
It's a very difficult question for me to answer. Yes, after we have one advantage, there is no appellate body present now. So the appeal is going to take a long time for it to be decided. Till then, we have breathing time. But once that breathing time is over, as far as SEZ is concerned, I would say inputs, etc., no problem. The income tax exemption and the export, the capital goods being given duty free, because The law provides only for duty-free to inputs. And inputs is defined in a particular way in the agreement on subsidies and countervailing measures. It does not include capital goods. So capital goods and income tax exemption are going to be a problem if India loses the appeal. So SEZ may have to be modified by having something, removing these two. The other benefits may be there, but these two benefits, which are of course very significant, even capital goods I will leave, but I think the income tax is a significant benefit, which may erode the attractiveness of SEZ, but I don't think we have any option.
So, Devansh Jain, can you explain what issues are there in the implementation of RCEP?
Sir, it is not what issues. There are a number of issues. I don't think where we decided not to join. Is that one you are talking about, sir?
Devansh, if you want.
Devansh Jain, yeah. Are you talking only about why India backed out of the RCEP? Is that what you are trying to ask? What issues are there in implementation?
Yes.
Okay. Now, there are a number of issues. I can't go into all of them because I was also a part of the negotiation, so I'm bound by certain secrecy thing. But I would probably say one of the things is we wanted to negotiate because there are 16 countries which had China also. So we were looking at what we call as an auto-trigger safeguard mechanism, by which when we provide these concessions, if the volume of goods from these countries crosses a particular threshold, automatically the benefit under the free trade agreement should be stopped. That is what we were trying to do. And at the negotiation, that hit a roadblock, and also a lot of others, because there are 28 rounds of negotiation, not one or two, it's a 28 rounds of negotiation. So there are a lot of things. So at the end of it, I think government felt that we are not getting any great benefit out of this particular thing. So we decided to opt out of that.
So again, Tejas, whether SION norms defensible in AD or CVD investigation, or such norms should be each SSE wise?
Sir, I don't think you need to see SSE wise. You can still have the SION norms, but what is important is whether the quantities of inputs provided as per the standard input output norms, where they actually used is what you will have to verify, and you must have verification system. See, the problem, let's say I am a manufacturer of certain goods, you are also manufacturer of the same goods. Let's say the two of us, and government gives 1.1 tons of input for manufacture and export product of 1 ton. Now I use 1.08, you use 1.07, let us say. Then to the extent that the benefit is given only for 1.08 to me and to 1.07 to you, there is no problem at all. To start with, you may give 1.1, but the moment I have completed the manufacturing and you know that I have used only 1.08, then the benefit to the extent of the 0.02 must be taken from me. If that is taken from me, it will set the system in place. So there is, in my opinion, again, nothing wrong in having the standard input output norm, but you have to find out whether the quantity actually consumed was less or more than the standard input norms, and if it is less, the benefit should be only restricted to that extent. That's the most important thing.
So, Srinivas Muduguri, please elaborate on developed nation criteria. Is it less than $1,000 GDP or anything else?
It is. There are two things. There are least developed countries, and there are developing countries which are listed in what we call as Annex 7 of the Agreement on Subsidies and Countervailing Measures. That Annex 7 talks about countries whose GNP, gross national product per capita, is less than $1,000 per annum. And it was decided in a subsequent Doha round that this will be calculated as per the World Bank figures. And if those figures are more than 1,000 for 3 consecutive years, then you lose your status as a developing country under that particular annexure. So the World Bank's data was found in 2013, 14, and 15 that we have crossed 1,000 GNP, and that is why we lost that particular status.
Nipun Rathi, don't you think all these high ADD investigations in India is hurting India more in our share in manufacturing? And at the end, we are manufacturing lower end products in value chain rather than higher ends due to inverted duty structure.
Sir, I don't think I can agree to the very, very general proposition, because again, for example, inverted duty structure, I don't think it is prevalent that extensively as you may think, because even the GST talks about refund only in two situations. One of the situations where inverted duty structure, where the inputs are charged at a higher rate and the output is a lower rate, then they say you can't use your input tax credit, so I will give you a refund. So generally it has been avoided, the inverted duty structure. The value added products have a higher rate and the raw materials etc. have a lower rate. That is how it has generally come. But again, whether the high anti-dumping duties are hurting India is again a question or a viewpoint, I would say. Why is there are, if you look at it from, if you are an established manufacturer in India, you will feel that you are not getting a fair share because of dumping by these countries, therefore you ask for anti-dumping duty. But if you are a trader or an importer, you say, I am getting those inputs at a much lower price. Why is not an Indian manufacturer able to produce and give it to me at the same competitive price? So it depends on one man's food being another man's poison. So if I am an importer of those inputs and then use it for my production, whether domestic or export, I want it at a lower price. Then I feel a lower price is good. But the moment my finished product is also being coming at a lower price, I want protection. Therefore, it all depends on the perspective whether you are a domestic producer of a product which is being dumped, or you are an importer of an input which you are trying to get from the domestic product, but the domestic price is higher, therefore you want a lower price. That is the reason why I would probably say, the importer in India of the dumped product and the domestic producer producing of that particular product are both two eyes of the Indian economy. It is not that you can hurt one eye and then gain something. You have to have both the eyes. Therefore, you are trying to balance in all these investigations to ensure that if there is really a dumping and it is causing material injury, the law requests or mandates that you must correct the situation by imposing an anti-dumping duty. It may cause some problem for the importer, but that is how the scheme has to work.
Yes, sir. Nimit, inverted duty structure refund restrict input service, and it is challenged in various courts. What is your take, though the matter is sub judice?
Sir, I think that is a GST question. I don't want to get into that. But yes, the law provides for a refund of the according to the inverted duty structure. The problem comes only in the computation of the amount. The person who is suffering from the inverted duty structure wants a refund of certain amount, and the department wants to restrict it in some way or the other. But that, I think, is a question of fact in a particular situation. What was the input tax credit you are eligible because of the inverted duty structure as refund, and what are the amount? But generally, it is totally on a GST level. It has nothing to do with the WTO law.
Okay, thank you. Vinod, as you said, SEZ would lose its sheen if India loses its appeal in WTO. What is your take, whether the government should give one-time opportunity to exit the SEZ scheme without any duty liability or not?
Sir, I don't think I have the wherewithal to answer the question what the government will do at that point of time. I don't think I can answer that question. And whether they will give it without any duty liability, absolutely no way I can answer that question. Yeah.
Nipun, what is your take on emerging debate on the LDR rules? Should India remove it or not?
What is it LDR rules you're talking about, sir? To be sure that I understand you exactly.
Nipun, could you explain it, or should I unmute you? I will unmute Nipun Rathi.
Yeah.
So that he can ask directly.
Yeah, correct.
So, and could we have these PPTs shared on this thing as well as on the WhatsApp, because people are asking for that?
Mm-hmm.
The PPTs which you have shared, could it be on the WhatsApp or on the chat box itself?
Yeah, I'll share it separately with you, and then you can share it with them.
Yes, sir. Thank you. We have already said that they can stand right. We have unmuted Nipun.
Yeah.
Yeah. Thank you, sir, for this opportunity. I just wanted to know, in case the debate on the lower of the dumping margin and the injury margin.
Okay.
So, yeah, that.
The way I asked you is, I was not very sure, because sometimes the terms you use, LDR, etc., we are lesser duty rule. That's all. I wanted to be sure that that's what you are saying. Yeah. Now, again, it's a very, very interesting question. We had, there are people who are on the call, just to make them, as I said in the anti-dumping agreement, if when there is a dumping, you can impose an anti-dumping duty not exceeding the margin of dumping, which is equal to normal value minus export price. That is what the dumping margin. The anti-dumping agreement says whether you want to impose a custom duty equal to the full margin of dumping or you want to do something less is a discretion left to the investigating authorities of different countries. That's how they've kept it. For example, the United States says, I will follow only the dumping. I don't bother about lesser duty and all that. Law says if there is a dumping, what is the dumping margin? I impose that as a duty. European Union says, no, I will follow the lesser duty rule. And in 1995, when we framed our law, we also framed it with reference to the lesser duty rule. What is the concept behind the lesser duty rule? Why India adopted, I would say, is while we want to protect, we do not want to overprotect the domestic industry. What do you mean by overprotection? If I find the dumping is $20 per kilo, but if I give a dumping duty of $12, the domestic industry will be protected. Then I don't want to have them that extra $8. $12 will enable you to produce and sell in the market and earn a reasonable profit. Therefore, I have protected you. That is the concept behind why I wanted, instead of 12, can a lower duty be adequate to remove the injury to the domestic industry? Is why we brought the lesser duty rule. And that is important in my view from Indian point of view, because in India, you have, again, there is an importer and there is a domestic producer. You have to balance the right of these two people. And a domestic industry which has to be protected from a legitimate dumping must be protected. But if $12 is adequate to protect, why impose a $20, which means the domestic prices will increase, and the importer, he will import and pay $20, or he procures from the domestic price at a price of $20 instead of $12. Why should it? Therefore, as I said, both are my eyes. In the economy, the importer is one eye and the manufacturer is one eye. Therefore, I am saying I will try to balance the right of these two parties. That is why I thought we will have the lesser duty rule. Now, obviously, right, what you are saying, there are proposals to say to remove the lesser duty rule because that involves certain discretion with the authorities to determine what is the non-injurious price, etc., to find out whether lesser duty would be adequate to remove the injury, or some issues which are presently being discussed. I would still say the lesser duty rule probably is important for India. In United States, when I asked the United States trade representative 20 years back why they did not have a lesser duty rule, he told me, Partha, we don't bother about what profits the industry makes. If they make 200% profit, they suffer a loss of minus 200 profit, they can't come to us and ask for protection. Therefore, I say if dumping margin is what I can do, I will do. Whether it will overprotect, less protect, I am not bothered. That is the attitude. But what we think is, you must protect the domestic industry. At the same time, if you can do it without too much of a problem to the importer and user also, try to balance it. Therefore, if you ask me my personal view, I would still say lesser duty rule is important for India even at this stage.
So we will take the last question. In SEZ or EOU, US is considering duty. Could you, sorry, I'm not saying to you. Could you mute yourself, Nitin, when we had unmuted you? In SEZ or EOU, US is considering duty exemption for 4 years as loan, which is contingent upon.
Yeah.
Which is contingent upon meeting exports and add interest on such loans for CVD rates. And in 5th year, they consider entire duty exemption as grant. Do you feel this is a refutable presumption so that there is no duplication of duty rates? The proposed scheme of RO, which India is going to launch, if declares one single rate, then will it not lead to ad hoc duty refund without administrating scheme so as to ensure that only, so this question is long, if you feel you can do it.
Yeah, I'm seeing that. But as far as the RODTEP, I will answer that first. Now, we still don't have any clarity on how that rate will be determined. It will be for a particular product or will be with reference to each exporter, etc. If it is going to be determined for a particular sector, then necessarily it will involve averaging. And if it is averaging, there may be some who will have more than the average, some less than the average. And to the extent that it is not based on actuals, there is again going to be a problem on sustaining that particular scheme. But today, I think the information on RODTEP is very scant for anybody to take a reasonable view on that. So we'll have to wait for industry to submit the information and the government to come up with the scheme and to determine how they have determined what will be the rates, etc., under the particular scheme to say whether something would be sustained or not. As for the second one, SCZ EOU, when you say US is considering duty exemption of 4 years, which schemes are you talking about in the context of SCZ? You're talking about it taken as a 4 years as a loan, and the 5th year consider the entire duty exemption as grant, etc. Can you give me the specific item,
what I will do is,
like capital goods or like yeah, please.
I will unmute him. That becomes better.
Yeah.
It is Tejas Chandul Shah. Meanwhile, sir, as we normally ask, like you said yesterday, you had attended the webinar of Mr. Lakshmi Kumaran, which we had deep insights. We also asked how to read. Meanwhile, one question which we all do, he says that how do you retain such great information? What is the take? How to go about it? As any other professional. There is no question. It's not correlated with that. But first we will have the questions, then we will go in normal function. We have unmuted him. He will just ask you.
Okay, right.
Yeah. Good evening, and thank you very much for sharing your thoughts, sir. And it has been amazing to listen to you. So my question is that in EU generally this condition about the NFE requirement to be met over a period of 5 years. So what we have seen in US CVD investigations, they consider that for 4 years, the as NFE is required to be met over a period of 5 years, for first 4 years they consider as a contingent, as a loan, exemption given you as a loan, and then add up as a interest. And in the 5th year, when if you meet the NFE, then they consider all and exemption granted over a period of 5 years as a grant in the 5th year, and then they add up for the CVD calculate. So it turns out to be like interest is getting added for 4 years and the entire grant is added in the 5th year. Can we just put across a point that in first year itself, if my exports are higher or foreign currency earnings are higher, so it's not a contingent, but actually I got it, and so that I can save at least some basis point on a on an interest on a loan kind of thing in a savings.
Yeah, I think this is a very tricky one, because what they have tried to do is to take the EOU and SEZ schemes, which provide that one of the conditions for you to be a success in those schemes is you must have a positive net foreign exchange. That means the foreign exchange earned should be at least $1 more than all the foreign exchange spent. Which means what? In a way, what you are trying to do is, in order to achieve this, if you use domestically procured goods and you don't use foreign exchange, you will have a net foreign exchange. Therefore, they are trying to bring it under the prohibited subsidy of that it is contingent upon use of domestic over export goods. That's the, I think, background through which they are trying to bring in. But whatever may be the thing, is there a benefit in that particular process? And if there is a benefit, because they say it must be computed only at the end of 5-year term, even though you are giving an annual performance appraisal report, that is really not of any use. At the end of the 5th year, if you have positive, then and only then you have achieved the purpose of the schemes. So that is the time at which it has to be calculated. But even otherwise, I still have a doubt. I think it is a question which requires a deep study as to the reason given by the United States as to how the NFE is greater than 0 itself could be treated as a grant by a government, etc. And in order to countervail, I think that requires a lot of analysis and arguments to convince them. According to me, it's a condition for the thing, but no one says you should buy only domestic goods, etc. It's not contingent on that. You must have foreign exchange, which means they want more foreign exchange earned than foreign exchange spent. But just because of that, if they say whatever you earn, the difference is given by the grant by the government, I think that's I don't think it is valid at all. And if they are not listening, I think we should take them and challenge them in the WTO if necessary. Government should definitely take that. We did take United States in many CVD investigations. I argued one of them in Geneva, and we won in both in the panel and also in the appellate body. And we are actually taken United States also to say that they have not fulfilled their obligations, and like a contempt, we asked them for a compliance panel, and that also is come through. So if after all that we find that what they say is unfair, apart from arguing, if they are not able to do, I think we must also consider a WTO action.
Thank you very much, sir. Thank you.
Thank you. Thank you.
So we will not be taking any questions now. General insights, just like we did yesterday.
Yeah.
He say, I'm just reading his name. Ashutosh Shukla. How do you retain such great information off the cuff?
It just comes experience, sir. That's all. Finally, it comes retain such information only through experience. That's all, and then you keep working on it. I don't think there is anything great about it.
Experience, I don't believe that experience will be experience. Firstly, one has to read a lot and then gain knowledge and then insights, and then one can retain experience. Yeah. I was just reading somewhere. It said that in any company, let's assume there is an advocate. Let's assume your firm itself. One lawyer with that same experience, with more experience, could be earning less, whereas a person with lesser experience can earn better. So his entire take is how to chisel his knowledge, insights, and retentivity so that he becomes better and he can take edge over the other persons.
Yes, sir. I think the only answer I can give is I don't think there is anything other than hard work.
No, let's assume one issue will always come, like the issue what we are talking today. The contracts, etc., in such like conditions are very, they run into volumes of pages, etc., or even the judgments are to that effect. Then how do you come to the main moot point? How do you scrutinize? Because in each such agreements, even each comma has its own significance.
Correct.
And sometimes you are running short of time when you are actually going into it. So what is your take for any young lawyer or a lawyer who is budding and he's right to take up his on his wings? What is your take? How he should go about it? How he should scrutinize? How he should analyze? How he should do this thing?
Sir, one thing I can only say is you must develop the habit of what I call a speed reading, and even before you start reading, suppose 3 or 4 volumes are given. If you start reading from the first page and then go to do it, then by the time you come, you're not. So the most important thing is what is this matter about? Unless and you know what this particular matter is about, and if there is a connected, an impugned order which you are challenging, I think that impugned order, knowing that inside out, will tell you what the crux of that issue is which we are going to address, and thereafter you start developing reading about it. This is what I would probably give an example. We have 2 types of writing styles. Same thing you can have with the reading styles. One is called the inductive style of writing, which is you start with section 7 says like this, section 8 says this, etc., and then come to the end. The other is you give the conclusion to the top. The moment you know what is it, the conclusion, or what is that you are trying to talk about, then anything comes thereafter, you can constantly relate it to that, which means the retention will be much better. Therefore, if you know what is the crux of the issue in a particular file or in a particular case, which you will come to know from either the questions of law frame or from the impugned order you are challenging, or a show cause notice for which you have to answer, that will give you what is the crux of that particular case. Once you identify that particular crux and you build all your arguments around it, retaining memory, knowledge, everything about that will become easier rather than start writing from the bottom to top. I would say the top down of knowing what is the crux of the issue, which can, as I said, if you are challenging, like you are saying inverted duty structure, etc., somebody challenging, what is the specific inverted duty structure we are challenging and why we are challenging, unless you know, you will not be able to build that. Similarly, whichever provision you are challenging, you know why you are challenging, that you must clarity. If you are appealing against an order, you know the order is against you in some aspect. So what is that aspect and how to deal with that will become the crux of the issue. If you have to reply to a show cause notice, show cause notice contains allegation, you will be able to identify by reading it what is the crux? There will be a lot of other things built around it, maybe not important, but what is the crux from the show cause notice? What is the real allegation? If I meet, I will be able to succeed. Keep that in mind and then start building your arguments around it. Then automatically, I think you will be able to read and also remember the most important points from any file, whether it is 3 volumes or 30 volumes. And of course, finally, hard work has to be there. There's no way that we can avoid that.
Another question, like your firm has been ultimately mentoring large number of advocates and professionals who joined your firm. The same way, what is your take to the students? One point I've understood that the entire knowledge has to be decimated. It's more like a funnel that on the top you start pouring it, and ultimately the end product which comes out of the funnel is the right point which has to be hammered in the right sense. But what is your take to a young lawyer or anybody, how he should, like, how do you mentor within your organization so that the people who are live on the Facebook or otherwise, what is your take that how they should start the drafting part, etc., and how they should do certain research also?
Yeah, sir, there are 2-3 things. One, of course, when I say in our organization mentoring, anybody who joins first, we give a lot of importance for training. On the day of joining, whenever every year people join, we have a 30 or 40 days of training, giving them a broad overview of various subject matters we deal with, depending on, of course, more depth on a particular area where a particular person is dealt with. So you very quickly bring him up to date on a particular area of law, the broad, of course, not all the depth which we have done for 30, 40 years, you cannot get it, but you give them. Thereafter, when you assign, the most important thing, what you are asking, when you say mentoring, that's important. So first is, you don't say somebody, you read this, you draft your reply. Then there is nothing. What you do is, okay, I am giving you the show cause notice. You are supposed to draft the reply to that. Please read the show cause notice, come and discuss with me. At that time, I would know what the show cause notice, and I will try to find out from him whether he had identified the issue correctly and he is able to express, etc. Otherwise, guide him as to say, why have you not considered this point as important, why you are not. And thereafter, once you have identified and say what is the correct, then we tell him what are all the things which you need to write and what evidence you require in order to substantiate your point. So always try to think of what evidence I require, because that will form part of the annexes to your replies or as an important thing to appeals, etc. So you identify what all information I require in order to prove my particular case. So collect that. So you must know the case. You must know what evidence you have in your hand in support of your case. You must also identify, is there anything more you require in order to support your case? Once you have identified all this, you can start writing. You cannot start writing right at the beginning. As Francis Bacon said, writing makes an exact man. Writing is the most difficult part. Conference, a ready man. Seminar, a ready man, etc. Reading, a full man. But writing makes an exact man. So you cannot write unless and until you are clear in your mind. And you can be clear in your mind only when you have read and understood what is it that you have to write about. So I would say mentoring starts from the first 2 or 3 activities with which you engage with a person. How to guide him on how to do and why you are doing it, I think he has to learn in that particular process. The other, of course, is not everything can be taught like that. The other is always to keep your eye open when you're working with the senior as how he is doing a particular aspect of work, and try to learn from that. He will not be able to tell you exactly do this, but you keep watching. You be near them. You brief seniors. Then they ask hundreds of different questions. Then you know how to prepare for them and answer. That is what slowly rounds a person. I think I will conclude by saying the very nice quotation, if I remember, from Michelangelo. Somebody went and asked him, so how is it that you make such beautiful statue out of these stones? And Michelangelo said, actually, I have not done anything. The sculpture is within the stone. I am only chiseling the unwanted portion. So what we have to do is, all of us have the talent. We have to chisel out the unwanted portion and keep sharpening ourselves. And I think that's the probably the message I will give it to the youngsters.
So the point well taken. Like you said, 2 issues. One was how to write better, that you how you have to build the thought process. But another point is, like we discussed with Mr. Lakshmi Kumar also, that the opening statement before any court is also an important issue. So
correct.
How do we go about it? What is your take on that?
Yeah, see, this is again what you will have before you go to argue a particular case, according to me, much more thought process than when you are writing a reply in the comfort of your office, etc., where you do, except the pressure of timelines, etc., you have to do. But when you're doing it, you always have to remember, one, a judge has got limited time. We may want 2.5 hours, 5.5 hours, 8.5 hours, etc. Therefore, we must decide how to open the case and say what is the crux of the issue and why you are saying a first point to revert the attention of the judge. Once that is done, I think you will get enough time to go about all your points. Therefore, that again means thinking about the particular case a number of times to identify what are the one or two most important issues which you will have to address to the bench in order for them to take attention, and thereafter, of course, you will get, once they are convinced that there is a very interesting case and you are capable of providing assistance, I don't think any judge really not gives you the time. So that's again a lot of thinking has to go. You will have to formulate in your own mind what are the types of issues or how do you want to project the case, and you must always have alternatives, because sometimes you take one view which you think is right, but suddenly it goes on a tangent with the judge. Immediately you must be able to stop and come back to another one in order to keep on going with your particular case. So that again comes from a lot of experience, but thinking has to be there. Thinking has to be there.
Point well taken. Only before we ask Shikha Dheman to give a formal vote of thanks, like you said that you just ask within the institution. I am also talking for other persons. You ask them to first read the show cause notice or anything, then you draft it. But I have also experienced during all these years that what happens is one can be good at facts, but ultimately while answering, he or she also has to know the law. Correct. So while anybody who's a youngster, how do you ask him that at the first instance that first he should have a good command over English? As you said, the communication skill is the main, one of the basic foundations to succeed. And second, you said absorb, that is, one has to observe somebody and then one has to absorb the issue, whatever. Like what you said, somebody doesn't guide you. I will take a step further. It's just like the father normally doesn't teach you how to do the shaving. Shaving is only by observation. It's never tutored somebody. So now how do you tell that person that you have, this is the show cause notice, this is the bottom line. But at the same time, my experience is that ultimately the reply has to be boiled down with certain legal aspects. Now a youngster who is new and novice in that subject, how will we ask him to do for a law research or going ahead about it so that he can become better?
See, the one way of doing that is to ask the person. Finally, I would say, at least my experience in the last 20 years of seeing the people are very bright who are coming from these 5-year law colleges and all. I find most of them are really bright and the research skills are far superior to probably the skills which I have. So what they require is a little polishing. Therefore, one way, again, we do it, okay, go through the show cause notice, you know the facts. But not only that, the show cause notice alleges that you have violated or you have committed something wrong. That is why it says why I should not recover the duty or why I should not impose a penalty. Some question is asked and they cite a provision of law. So based on that, be thorough with whatever the provision cited, read that, and come to me with 1 or 2 propositions of law on which you have to do research in order to answer that. That is one way, again, not a spoon feeding, but you are telling them the provisions which are quoted, you must go through them and you must understand those provisions very clearly. And based on those and based on the facts of law, what are the research you need to do in order to support your particular viewpoint. That I think it's again very, very important for this. Again, have to be determined with reference to facts and the legal position of each case. But asking somebody to come up with propositions of law, 1 or 2 or 3 which are required in a particular case, identify them first. Because once you identify, going and searching for them and coming out, etc., that's another skill. After that, in the particular judgment which you take out, there may be some portions which may not be in your favor. How to read the ratio of a particular judgment, again, you will have to go through about that. But the first important thing is ask them to even come up with the propositions of law which, if you are supposed tomorrow to supply and argue, what propositions of law would you look for and why? And I think interaction is necessary. That's why the word mentor use is very, very important. There are two types of mentor. One is interaction, the other is observation. There are a lot of people who may not give you the time or sit with you and say you do that. Then you do it only with the observation. Try to learn from the observation, keep a note and proceed further.
So thank you. I suppose large number of participants will actually be enriched. I just add to what you have said. They say this is a habit of reading, writing, all are habit. And habit, they say, is a word derived from it, then it becomes bit, then a bit, then it becomes a habit. So one has to study, study and study according to you and do hard work. So, and thank you. We had a great session, though I would say it's a session which is slightly not in a routine case, which every lawyer or any professional does it. It's slightly different than what topics are done. Be that as it may, that the webinar has been well attended and well received. Tomorrow, like we have been focusing in all these webinars, primarily 5-10 minutes we devote as to how to become good advocates. Tomorrow, we have a full dedicated session on advocacy tools and skills by Justice Damash Shadri Naidu, who is a well-read judge, and his judgments are also well taken, and he was a very proficient lawyer before becoming a judge. He has been a judge in Andhra Pradesh, Kerala, and now he's in Bombay High Court. His judgments, and we had him earlier on the session. So we will say everybody should stay connected for the next webinar. Thank you, sir. We are all actually delighted and enamored by your presence. And it also shows, yesterday we had Mr. Lakshmi Kumar and today you, why LNS is considered to be a benchmark which others have to follow. Thank you for all the insights. Over to you, Shikha Dhiman. She's an assistant professor in the ULS, the partners in all these webinars.
Yeah.
A formal vote of thanks from her.
Thank you very much. Thank you. Yeah. Please.
Thank you, sir.
Thank you, Vikas, sir. It's always been my privilege to get associated with Beyond Law CLC. I, Shikha Dhiman, on behalf of University Institute of Legal Studies, Punjab University, Chandigarh, and Beyond Law CLC, feels pride in delivering vote of thanks on this occasion when we have amongst us Mr. R. Parthasarathy, Advocate on Record, Supreme Court of India, and Principal Partner, LNS. At the very first instance, I always thank Almighty for making all of us capable of organizing and attending such events during the time of crisis which we are actually facing. Now, I extend my heartiest vote of thanks to Mr. Parthasarathy for deliberating with us on the topic free and fair international trade under WTO. Sir, you have beautifully structured your lecture through PowerPoint presentation, and it has actually shown us a new path towards international trade law. Your ideas and elegance of explanation definitely needs a deepest sense of appreciation. And I personally got to learn so many new things about international trade law, sir. Looking forward for such more lectures from you. And as rightly said by you, that Sunday is a Sunday, whether it's a lockdown period going on. So once again, I thank you so much, sir, for sparing your valuable time, especially on Sunday evening when everyone wants to be on a relaxing mode. Thanks a lot, sir.
Yeah.
I would also like to thank all the participants for their presence as they stand as the pillars of our webinars, because without them, our webinars won't be able to accomplish its goals. And finally, a big thank you to all the members of Beyond Law CLC for conducting such webinars and putting in all the efforts for making it a success. Lastly, stay safe, stay home. Thank you, Vikas, sir.
Thank you. Thank you very much. Thank you for the opportunity. Thank you.
Stay safe and stay blessed. And tomorrow the session starts at 5 p.m.
Yeah. Thank you.
It's a Monday, and one shouldn't have a Monday blues. That is why we took a topic which is slightly different from the others. Because everyone, sometimes it's Sunday, sometimes it's Monday. One who wants to find excuse, he will find it. And people like you who said that 4 continuous webinars on Sundays shows that you have, they say to be successful, you have to do something different. As there's a book, successful people don't do different things, they do it differently. And differently is hard work, success, and putting the right things in the right frame. Thank you, everyone. Stay blessed.
Thank you. Thank you, sir. Good night. Thank you. Thank you. Bye.